of this presentation, you will be able to understand how to make money work for you, the bank, and your investors. This is what I teach my students. The aim is to understand how to generate massive cash flow or massive income and minimize cost. So this cash flow model that I'm about to teach you is basically what you need to know and basically what you have to do in any type of business that you're in to generate unlimited loan from the bank. I'm going to show you from a property investor's point of view. In every deal that you have basically 4 components. And these 4 components are your income, which is the money flowing in, right? The money you get into your business. And this is where I always believe that you've got about 80% control in this. Normally, when we buy properties, we look at how we can remodel or how we can generate massive income. And we do this by remodeling our properties and by figuring out where we can get more money out of. The second component is expense. Your expense is negative. It's money flowing out of your business, right? The expense in our world is made up of vacancy rates, maintenance, insurance, rate and taxes. Now, from your expense, your income less your expense will give you what we call the net operating income, which we call it the NOI, right? And this is basically, the NOI is basically what the banks look at. So a bank will finance your business based on what your NOI number is. And once you've gotten your NOI, we plug in this, your debt. In our case, it's the mortgage. So the difference between your NOI and the mortgage gives you the cash flow, right? The cash flow can be positive or negative depending on what your other components are saying to you. So for you to have a massive cash flow, and the banks always look whether your business is or your deal is going to generate positive cash flow. To generate positive cash flow, your income must be higher than your expense. And hence I say that you always have 80% control because on your income. Because at the expense, at 20% control, you don't know, it is what it is. So once you've identified that and you've understood that, you will be able to create massive of this, because this is what you want to demonstrate to your investors. On the next sheet, I am going to take you through a real life property deal that we did so that you get a real life example. This is a deal that we did a few years ago. We got a property very cheap on the market. We got this property at 450. The property needed some renovations and remodeling, but the bank valued this property for R1 million, and they gave us 80% loan to value. By that I mean that they gave us 800,000 rand on this deal. So you look at this. Property bought 450,000 rand. We've got 350,000 rand excess in cash from the bank who believed in our business and what we did to pay for your legal fees and to remodel your business or to finance the renovation aspect of the business. On this deal, in the first year, we generated a rental income of 348k. Our expenses came in at 101k. I've basically broken down the components of what made up that 101k expense, which is your maintenance. Then this is exactly what we presented to the bank, by the way. This is what the bank wants to see. So your maintenance comes in at 5%, which is 17k. Vacancy, we demonstrated to the bank at 10%, but in actual fact, in the first year, our vacancy rate was actually at 6%, so we made more money. So it's 35k at 10%. Our letting agent fee at 10% gives us 35k, and your rates and taxes at 4k, and our insurance came in at 10k. So in total, your income less the expense gave us a net operating income figure of 247k. And the first year, our mortgage was at 80k. Your net operating income less the mortgage gives you a free cash flow of 167k. And you should notice that our free cash flow was more than 2 times our mortgage that we took from the bank. And this is what I mean by saying that if you can demonstrate that your deal has little or no risk at all, the bank is going to give you the loan.